welcome to our first ever webinar. Bearing that in mind, please be forgiving of any issues we have as we navigate our way around this, the technicalities of running a Zoom webinar. So this session is designed to give you practical and positive advice as our panel of experts will guide you through the support available to you, the considerations you should be mindful of, and what things you can do now to help your business. The format's going to be in a Q&A style, where I'll invite the panel to ask the most commonly asked questions that we're hearing from our clients. For those that don't know me, I'm Pamela Phillips, and I'm the Managing Director of de Jong & Phillips, a firm of chartered accountants based in Epsom. And now I'll introduce you to the panel. So firstly, we've got Ryan Meredith.
Hi.
Going to just tell us a bit about yourself?
Yeah, so worked at de Jong & Phillips for a year now, been an chartered accountant for nearly 2 years, and been supporting businesses for 6 across most disciplines within the financial spectrum that have helped me gain the skills to be able to assist our businesses through what is a bit of a challenging period, is fair to say.
Great. Thank you, Ryan. Lauren, would you like to introduce yourself?
Yes, hello, I'm Lauren Cullen of Cullen & Co. My background is I'm a chartered accountant, but I specialised in insolvency around 15 years ago. For the last 4 years, I've been running my own practice in Epsom. And obviously, I enjoy looking after companies and individuals. But yeah, in these challenging times, yeah, even my advice is even more paramount now. So pleasure to be on this webinar.
And Alison, would you like to just introduce yourself?
Hi, good morning. My name's Alison King. I'm the director of Bespoke HR. Bespoke HR is an outsourced HR company that's been running for about 15 years. And at the moment, obviously, yeah, having very busy times, myself and the team dealing with lots of questions regarding furloughing and how we manage our staff and just helping people work their way through this challenging time.
Brilliant. Thank you, everyone. So to start off with, we're going to look at what steps should you be taking at this moment. Many businesses will be struggling to trade right now and unsure if they should be continuing to trade. What steps should they be taking? Lauren, do you want to answer this one?
Yes, yeah. The first port of call that I've been saying to anyone ringing me is please speak with your accountant because they know your business far more than I do. They've been familiar with helping you run it for some time now. And really it's the accountant who comes in, who's paramount to look at the company's financial position, consider financial projections. Although, of course, at this moment in time, we really don't know how long the country is going to be affected in this way. But your accountant will be able to assist with, you know, and we'll get onto this later, is deferring the VAT and HMRC payments, getting grants and loans, and also just keeping you up to date because daily, I know certainly the last couple of weeks, it's every day something's been coming out from the government, and hopefully this will start to diminish slightly and we know where we are and find our feet. But really your accountant just comes into play. So your accountant may well say to you, go ahead and speak with an insolvency practitioner just to double check. And I've certainly in the past acted lots of times with companies and with accountants to make sure a company's doing the right thing and just to be aware of directors' duties and just to have on file what you need to be doing at this time, making sure you're acting accordingly.
Okay, brilliant. And obviously cash flow is going to be a consideration for a lot of businesses right now. Is there anything particularly that you could be doing to help improve their cash flow?
Yes, certainly. I know that you, Ryan's going to come on to the HMRC deferral schemes and loans, etc. But yeah, really the key thing now that I'm telling clients is to make sure your credit controls are in place. That obviously you're trying to get in as much money as you can where you've got your debtors. Any repayments due to the company, please try and collect in to help cash flow. And then just other things again that accountants will be advising you with, just looking to see, were you thinking about capital expenditure? If so, defer that. Look at to see, obviously banks are becoming on board here, and we'll again touch that in a little bit, but finance payments, leasing, again you may be able to get holidays, and then other items, reducing stock levels, reviewing your insurance policies, seeing if there's anything available to you, and again, you know, working with your accountant in that way. And please make sure that you are documenting the advice that you have with your accountant, the board meetings that you're having, obviously virtual at times now, but just have that record of the choices, the decisions that you made going forward.
Great. Ryan, is there anything you want to add to Lauren's
Yeah, so
points?
there's many different things that you need to consider about cash flow. Furloughing of employees is a big consideration, and when the rebates will be available from HMRC, we'll be coming on to that. But also there's things more loose planning that you can do around deferral of taxes. So any VAT liabilities that are due to be paid between the 20th of March and the 30th of June have been deferred automatically. You should be cancelling your direct debits if you've got a direct debit in place, because HMRC will still look to collect that direct debit, so that needs to be done. And they're also being, HMRC that is, are being more flexible with time to pay arrangements. So if you've got a corporation tax bill due in the short term, then actually setting up a payment plan with HMRC can be achieved at the moment. We're not sure what periods, that's on an individual basis, but I think maybe between 6 and 12 months, that feels about reasonable, and they'll ask for monthly commitments. Like Lauren mentioned on looking at non-essential spends is really, really key. So looking at your profit and loss line by line and making sure you're cancelling subscriptions you might not need, any plans for any marketing, pay-per-click that you're not intending on using because the business isn't up and running, depending on the industry you're in. And also looking at reducing potentially insurance cover if it extends to certain operations. So a number of employees being in the business at any one time may give you a little bit of window to reduce your cash outgoings. And don't forget to look at your debtors. And if clients can't pay now, try and set up payment plans with them so that you're reducing your risk over the next few months. So if you set them up on a payment plan to pay you in 4 instalments, then every instalment you receive is reducing your risk by a further 25%.
Okay. We've got some clients that will be looking to maybe extend their current overdraft facilities or take on loans. Is there anything they should be mindful of before doing that, Lauren?
Yeah, so what I'm finding is banks are being supportive at this time, and try and reach out as early as you can. You probably do have, you might have an overdraft facility already in place, but you may be looking to extend that or get one of these loans available. But again, doing that in conjunction with your accountant will assist you. And do please check the position with being a director and giving a personal guarantee. Again, I'm seeing a lot of insolvency practitioners and turnaround experts giving their advice and saying they're coming across different banks asking for different things. So some banks may not ask you for a personal guarantee, others will, and please just make sure as a director that you're thinking about your own personal liability going forward.
Okay. And some of our clients will have commercial properties that they rent out, that they lease. Is there anything they should be mindful of?
Yeah, so recently, literally last week, 23rd of March, the government basically extended their complete ban on evictions and protection for social and private renters. They extended that to commercial tenants. So this provides that the commercial tenants who cannot pay rent will be protected from eviction for 3 months. But, you know, again, be mindful of your situation with rent and the landlords, and it's just having that conversation. So again, I've come across clients who have reached out to their landlords. For example, it was a retail shop that had a number of different premises, and one landlord straight away said, look, we're desperate for you to stay. Please, we are going to reduce the rent. It's going to be £1 a month for the next 3 months, you know, because again, with landlords, they're not going to want an empty premises. They've got a rate obligations thereafter, so they will be keen to try and ensure that their premises remain occupied, and it's working together in these difficult times. So do reach out to have that conversation.
Yeah, so keep communicating, talking to people. As a director, can I become personally liable for company debts?
So this is an interesting thing, because literally over the last few days, the government have announced, and you know, we knew that last week that this is what they were wanting to do, is quickly reform some insolvency laws, and one of these is around wrongful trading. So just as a reminder, wrongful trading is when a director ought to have known to stop trading, and obviously this situation is unprecedented, so who knows how long really the economy is going to suffer in this way, how long companies are going to struggle. Hopefully it really won't be that long, and that's why the government was so keen to basically trying to lay directors' fears, to say, look, we understand these circumstances of trading are not normal, and therefore, you know, we are going to be more sympathetic about you continuing to trade. We want businesses to remain going. So in a way, please do not be frightened of this this insolvency law with wrongful trading. So essentially, in the past, an insolvency practitioner could pursue a director for the additional liability that arose, you know, following that date, really, when the director ought to have known. So there's always been a little bit of a query over how exactly you work out the point the director should have known, and it is always difficult to run a business, and insolvency practitioners are always mindful of that, and again, that is key, where you go ahead and you have your conversations with an accountant and you document your reasons as to why you've continued to trade. But certainly for now, directors should be a little bit more relaxed. I'm not saying completely relaxed in these circumstances, obviously not, but you know, essentially the government are saying, please continue to trade. We can't have all companies stopping in this way. So and you know, there is light at the end of the tunnel, that we will get past this, we will get over this, and as a director you shouldn't be personally held liable if during this time the company obviously does struggle financially.
Yeah, brilliant, thank you. So now we'll move on to what are the government specifically doing to help businesses. And there's a few things that they've brought in. So one is the small business grants, then we've got the job retention scheme, something like furlough, the business interruption loan, and the opportunities to defer taxes, which Ryan mentioned earlier. So we're going to talk through them one by one. I'll just mention now that there is the chance for you to ask questions. So if you look on your screen, there should be a Q&A box somewhere. And if you type in questions there, we'll do our best to answer those questions at the end of each section. And what we don't get around to, we'll try and follow up after the webinar. So to start with, we'll talk about the small business grant. So this is going to be available to some clients. Ryan, what is the small business grant?
So there's two small business grants available, which are sector specific. So I'll start with the lowest of the two. So the first one is available for 700,000 of the smallest businesses, with one real caveat in that, and that's that you must qualify for small business rate relief or rural rate relief. Most of our clients may be on the side of small business rate relief. To qualify for small business rate relief, you need to have a rateable value on a commercial property of under 15,000, and you must have been assessed for rates and be qualifying for that relief as at the 29th of February 2020. So this is a £10,000 grant available to those businesses who are in that situation, which is non-repayable. So it is a grant that the government aren't asking for the funding back. Now, in terms of accessing that scheme, you need to contact your local government authority, but they should be issuing letters in terms of guidance, and you can call them to make the claim, in which case then they'll raise a backs payment and put it into your account. The other business grant that's available is more specifically for those businesses that are in the retail, hospitality and leisure sector. If you have a rateable value in this sector of under 15,000, you will still qualify for the £10,000 grant. However, if it's between £15,001 and £51,000, then all the same conditions apply apart from the small business rate relief. You're eligible for a £25,000 grant, and it's accessible in the same way. So contact your local authority, ensure that you're eligible for the grant, and they will be sending out correspondence. You make a claim with the local authority and they will raise a backs payment of 25,000 as soon as possible. And again, this grant is non-repayable.
Okay. And is it obvious? Is it going to be obvious to people whether they're entitled to this grant?
So most would have received rates letters. Rates are due to commence again with effect from April 2020. So most will have already received an assessment of rates. So you just need to check the letter you've had from your local authority, which will note on that letter what the rateable value of the commercial premises is. It will also note on there your eligibility from a small business rates relief perspective. So in checking that, you will be able to see whether or not you're eligible for any of these schemes. If you're unsure and you haven't received any correspondence, then I would get in touch with your local authority. It's worth mentioning that many small businesses don't pay rates because they're in leased properties where the landlord will pay the business rates on their behalf. It's also worth saying that actually in that instance where you're not liable for the rates, you aren't eligible for any of the grant packages available.
Okay, thanks. So now we're going to move on to the Coronavirus Job Retention Scheme. Firstly, what is the Coronavirus Job Retention Scheme? Alison, do you want to help us with this?
Sure. Okay. Yeah, the job retention scheme was announced, I think it was 2 Fridays ago now. Up until that point, no one had probably heard the word furlough. Now everyone is saying the word furlough. So basically, it's a temporary scheme that's open to all employees. They've said initially that it will last for 3 months, but that may be extended as and when the time comes. It's designed to basically allow employers to access an 80% rebate. Salaries capped at £2,500 per month. So employers are eligible to put employees on furlough scheme and they will get 80% capped at £2,500 back from the government. Employers have to pay it first and then it will get rebated back through the PAYE system.
A common question that we receive from many of the businesses that we work for is whether or not the £2,500 would cover employers' national insurance and employers' minimum pension contributions. So it's been updated, the guidance, that actually the £2,500 will be topped up to meet the employer's obligations, so minimum employer obligations.
Okay. So before someone decides that they want to put their staff on furlough, they might want to, some people might be looking at this as an opportunity to make employees redundant. Can they do that?
So up until the furlough scheme had started, because obviously the crisis started before the furlough scheme was announced. And so we found that many companies were making decisions before the furlough scheme was available to them. So redundancy certainly was an option at that stage. Companies still can make them redundant, but employees, you will find, will request that they're put on furlough first. And it has been documented that if you go through with redundancy, rather than doing furlough, you may be subject to some kind of litigation, because there's no reason why you shouldn't have done the furlough prior to redundancy situation, because it's available to every business and every employee. So that's an option that you can, you should explore.
Okay, that's good to know. Then we've got if we do choose to furlough but don't have any work at the end of the furlough period, then is it okay to?
Then you would look at the redundancy scheme. So say the furlough scheme expires after 4 months and then there's still no work, then it's a redundancy situation, as it would have been prior to the furloughing. The furloughing is just pausing time, letting everyone kind of pause, put the employee dormant, get that, access that money. Let's see, where we are, and then if there's still no work at the end of the furlough scheme, then we just revert to the redundancy situation if there's no other alternatives.
Okay. Can staff work when they're furloughed?
Absolutely not.
Okay.
There's no work at all. If the employee is dormant, there's no work. Even sending an email or is classed as work. So no, they can't work at all. Of course, this scheme was put together in a hurry, as all the other schemes. So there are loopholes, and there are kind of ways it can be exploited. But I'm sure that when the dust settles, the government will be looking at ways to try and make sure that people weren't exploiting the scheme. So yeah, absolutely no work in that time.
Something the government have published, sorry, just to jump in, but something the government have published is that if an employee wants to undertake training,
yeah,
then they're allowed to. It's just that they can't be seen to be providing services or generating revenue for the business.
Yeah, they can train and upskill, but they can't work on behalf of the business or generate revenue or market the business or anything like that. They can train, they can volunteer, but no business activities.
Okay. Can I partially furlough someone, so by reducing their hours?
No, that's a separate matter. You can furlough someone. They released last week further guidance on the timescales of furlough, and it can be for 3 weeks. You can furlough someone, and then, so if you had roles where, I don't know, they kind of dovetailed into each other, you could furlough one for 3 weeks and then furlough the other one for 3 weeks. But that's the time power. But no, if the work is still there and the employee, and you still need the employee to carry out the work, it's just not in the same volume as it was before, then you could look at doing a reduction of hours and a reduction of salary, but that's a separate scheme to the furlough scheme.
Okay. We've just had a question in from someone, I don't know if we know the answer to this, but we've been asked, can furloughed employees claim the costs of training?
Oh, that is a very good question. Can claim it against whom, though? The employer? Yeah. I suppose, yeah. If that's something the employer has agreed to beforehand, if they say, I'm going to furlough you, but I want you to do this course whilst you're furloughed, and I'm happy to pay the £500 for the course. If that's an agreement that the employee comes to with the employer, then I can't see why that would be an issue.
Mm-hmm. Okay.
I completely agree.
Yep. Okay. Then we've got, let's move on. We've got another question here. Let me just read the questions. If you want to start redundancy proceedings after furlough, is the process reset? For example, if it starts as if furlough hasn't happened.
Yeah, so you would just go through a redundancy process. So prior to all of this, a redundancy process would be if you had, if the work diminished and you needed to make redundancies, and you had, say, 5 people doing a role, you would put those 5 people in a pool, and you would use fair and selection criteria to decide which one of those were being made redundant and which ones stayed. It would be exactly the same process, and you would, again, you would tend to use this. This is something that may come up with furlough, although we haven't seen it yet. But it's worth noting that if you had 3 people doing the same role, for example, and you needed 2 furloughed, you would need to make sure that you've used fair criteria as to the one that isn't going to be furloughed. So I suppose fairness and reasonableness applies all the way through. But yeah, certainly, once you furlough people, if you're then going to make redundancies, then it's set to normal redundancy criteria.
Okay, brilliant, thanks.
And Alison, just a quick question from me. Is there any,
yeah.
Sorry, is there any potential risks of somebody, to the director, of having somebody on furlough and then making a redundancy, such as the period of employment?
Yeah, so basically, whilst you're on furlough, your continuation of service carries on accruing, as does your holiday entitlement. So currently, the way the law stands, if someone's got less than 2 years service, they're not entitled to redundancy pay, and they've got limited employment rights on less than 2 years service. But if they were, say, with you for 1 year and 10 months, and then you furloughed them for 3 months, then obviously that would take them into the 2-year bracket, in which case they would then accrue redundancy payment and more employment rights because they've gone over that 2-year bracket. So that is something that employers are considering with people who are less than 2 years.
Okay. So if I were to furlough someone, can I furlough them for 1 month and then, for example, unfurlough them next month if work does become available?
Yeah, absolutely. So as long as it's that 3-week minimum, you can furlough them for 3 weeks and then unfurlough them. In order to go through the furlough process, you need to have a conversation with them, explain to them what you're going to do, make them become aware that you're going to furlough them. And then there's some documentation that they would need to sign, because effectively you're agreeing that their pay is going to be reduced to that 80%, although employers can increase it and pay the uplift of the 20% if they want to, but you have to get them to sign the documentation to say that they've agreed to be furloughed. But yeah, you can then unfurlough them after 3 weeks.
Okay.
You can't go ahead and do it without the signed documentation, because it is a change to their normal working agreement.
Okay. So from what month, Ryan, you might be able to answer this one, from what month can you start claiming furlough, and how long is the furlough window, the job retention scheme, open for?
So there's a few things to consider when considering furloughing and the timing of. So the furlough scheme is available currently from the 1st of March. They got backdated when it was announced on the 23rd of March, and it carries right through to the 31st of May. What this allows, and it was brought in before the March payrolls were completed, was that if you've effectively laid somebody off or made them redundant before the scheme was conceptualised, is that you can bring them back onto the payroll and choose to furlough them instead. And that was mainly specifically for pubs who pubs and restaurants who wholesale got rid of employees because of the lockdown proceedings. So the scheme, as mentioned, runs from the 1st of March to the 31st of May. There is a minimum furlough period, and that's 3 weeks. So you need to consider that as well. So obviously, I believe currently that if you were to furlough somebody mid-May, you can still keep them on furlough right up until the end of the period, and that would still qualify. But it's just worth considering the consecutive furlough period. So you should really be corresponding with employees every 3 weeks to tell them that they remain furloughed. And people can furlough for 3 weeks, come off even just for as little as a day, and then go back on furlough. So if you need flexible resource or somebody to do a couple of days work, then actually you can unfurlough them for a couple of days after the 3 week period and then furlough them for 3 weeks. But you must make sure and be clear that when you are furloughing people, it will be for that whole 3 weeks, and they can't provide any services or generate any revenue in that period.
And Alison, does that
have been on the sorry, Pam, they need to have been on the payroll before the 28th of February to be qualified for furlough as well. So yeah, we're having quite a few employers phone us now and say that they had someone start on the 3rd of March, 4th of March, 5th of March. They cannot be furloughed by that current employer because they started after the 28th. So what we're recommending in those situations, they can go back to their previous employer and request that they get put on the payroll and be furloughed. That's happened in a couple of examples, but yeah, it's totally up to the employer as to whether they want to do that or not.
Okay. I'm a director of the client question. I'm a director of my own company. Can I furlough myself? Alison?
Well, that's a tricky one, because it's unlikely that a director of a company isn't going to do any work for the company in a 3 week period. As I said, even sending one email on behalf of the business is considered work. So it's highly unlikely that that's going to be something that's kind of seen as, a furlough situation. So, yeah.
And Ryan, I think there was an announcement recently that might have changed that for some directors.
Yeah, only for some. So I think if you've got 2 directors that are part of a business, then you can justifiably furlough one if they're not doing any commitments. HMRC did say that if a trade has completely stopped and a director wants to complete work in line with their statutory obligations, so filing accounts, confirmation statements, VAT returns, things like that of a statutory nature, then they can still furlough themselves, but they can't undertake any further work than their statutory obligations.
Okay, great. We've had someone say they don't know if they'll get any work in the next few months. Can they furlough themselves in retrospect should they find they don't get any work? Ryan, do you have a view on that?
I think, well, no, because the furlough period has to have been commenced with a minimum of 3 weeks. Retrospectively is kind of a hindsight thing, so you would need to furlough yourself for that minimum period before coming back off the furlough period and essentially completing another assessment to see if you should be furloughed for a further period. I wouldn't suspect a retrospective application of the rules will be accepted by HMRC.
Okay.
No, I totally agree. As the kind of criteria, the kind of way of criteria HMRC checking to see, who's doing it, who hasn't been released yet. But I suspect, in time that will come out. And I think, retrospective applications are going to be something that, they're not going to look keenly upon.
And I think, just referring back to something that Lauren mentioned earlier, was that directors in this period should really be keeping minutes of any critical business decisions they're making, and actually doing that retrospectively is fraud. So the minutes should be effectively signed off and agreed by the business before entering that period of furlough and not backdated.
So the top up of 80%. So at the moment, the government's committed to reimbursing 80% of people's wages or salaries. As employers, do we have to top up salaries from the 80% up to the 100% for furloughed employees?
You can choose to.
So you can choose to.
You can choose to top it up, and you don't have to top up even. You don't have to do around 20. You could say I'm going to top up by 10 or whatever. So you can choose any top up amount up to obviously 20%. All I would say is, again, that comes back to the fairness of the application of the scheme. So if you had 5 people and you were furloughing all 5, you would, if you can't just choose to top up one and not the others, unless there was a fair and legitimate reason for doing that. So just be careful on how you apply that, those top ups if you're going to do that.
Yeah.
And a question I've been asked as well that directly relates to that is, can I have somebody on furlough for 3 weeks and top up their wages for that period, versus can I then on subsequent weeks not pay the top up? Which I think is quite a valid question, in the sense that the longer this goes on, making a decision to top up the 20% now and carrying that right through for a few months could be at the detriment of the business because of cash flow needs. So the advice I've been given, as long as you're assessing it in line with each furlough period, then it's okay to be flexible as long as it's consistently applied to employees.
100%, 100%. Before the furlough started, the only option, one of the options available to employers was to do salary reductions, and that was a kind of strategy that companies were going to roll out before this got mentioned, of maybe do a 20% pay drop for the first month and then 30% and so on. So that just kind of is in line with what you've just said, but in reverse, I suppose.
And if someone does decide to not furlough an employee, this is a question we've had come in, but instead reduce their hours and pay, would that affect any possible future redundancy process, or would that be based on their pre-crisis contract, Alison?
Yeah, so if you were going to reduce their pay, their hours and pay, and then it was going to be calculated on the pre-reduction, because the reduction is only going to be a temporary reduction, and otherwise unscrupulous employers, which I'm sure none are listening at the moment, could just reduce everyone's pay and then make them redundant as a way to kind of circumnavigate their responsibilities. So it would be calculated on the original pay.
Okay.
But again, just be warned, if you are reducing hours and pay again, and then you've got someone furloughed, you just need to be careful, because it potentially could cause unrest and complaints from employees as to who's got what end of the stick.
Yeah. Okay. Ryan mentioned this earlier, but just to clarify, the 80% that the government will reimburse, what does that include?
So the 80% that the government will reimburse is effectively the employee's gross wage. So that will cover employees' national insurance and their PAYE obligations, which continue as normal. So the 2,500 isn't a net payment to the employee. That's the gross employee wage cost, inclusive of employees' national insurance and PAYE. As mentioned, the government has since then said that 2,500 will be topped up when you make your claim through the job retention scheme by the minimum employer national insurance contributions and the minimum employer pension contributions. So in theory, the 2,500 will end up being more close to around 2,800 when you process the claim.
Okay. And what about staff on 0 hours contracts? Alison, do you know what they will be getting paid, or what they'd be entitled to?
Yeah, so the staff on zero hour contract, they're also eligible for this. Basically, yeah, you would work out, quite often staff zero hour contracts isn't really a thing. You know, they'll just continually work 35, 40 hours, you know, every week. And so then that's what you would use to as the amount to furlough those. And if they are genuinely 0 hour contracts and their hours fluctuate up and down very much, you know, throughout the year, then you would take a reasonable amount of time and work out their furlough rate as an average of their normally over 3-month period as to the average of what they've worked, and furlough them over that. But if they've worked continually the same hours every week, then you just need to treat them in that way, and that's their work out the furlough rate on that.
Okay. So in terms of negotiation, the scheme specifically mentions that furloughing an employee might be subject to negotiation. What would those negotiations entail, Alison?
So it's just making sure that the communication, you've spoken to them, you've told them that they're aware that they're being furloughed, that they understand the implications of those, that they sign the documentation, that it's a kind of a two-way process rather than, you know, they don't know anything about it, and they're just kind of, you know, getting on with their lives, and we're claiming back the money. So it's making sure that the documentation's signed and that they're fully aware and that they understand that effectively, you know, that 80% is being paid, and whether or not you're going to pay the additional 20%.
Okay. And is there a template we can use to designate someone as furloughed?
Yeah, sure. We've got a letter that we give to companies. They can give it to their employees. We've also got a script that they can, you know, employers can use to go through it. And we've got a frequently asked questions that they can attach to it. But in the letter that goes to the employees, then there's a declaration at the bottom that the employees can sign and return to say, yep, they've accepted it. Brilliant. And then that's formally documented.
Is that something you'd be happy to share with the people on this call?
Yeah, that's fine. Yeah. No problem.
Fantastic. Thank you very much. And what if the staff member doesn't agree to furlough?
If the staff member doesn't agree to furlough and there is no work, then it's a redundancy situation. But I can't imagine many people are going to be falling into that pot, but you never know. But yeah, I don't understand why they wouldn't take that. But yeah, if there's no work and they don't agree to furlough, then it's a redundancy situation.
So in terms of actually claiming the wages for furlough staff back from the government, Ryan, do you know how does this process work, and how long will it take to actually receive the money?
The short answer on that is no. But effectively, they're urgently working according to Rishi Sunak day and night in releasing this scheme. So it's expected that the scheme will be available for reclaims from mid-April. And obviously it's going to be processed in order of the claim. So all of the claims that were made in respect of payrolls that were completed for the March month will come first. And it's anticipated that these repayments will start to be received in the last 2 weeks of April. Then subsequently, when April's payrolls completed and the scheme's been up and running, you would assume that the first couple of weeks within May will be the reclaims for the April furlough period, and then first couple of weeks of June for the May, and so on and so forth if the period is extended. They have listed what details you'll have to make. So effectively, it's not too onerous in terms of the information. So PAYE reference number of employees being furloughed, the claim period, so the start and end date of the furlough period, amount claimed per the minimum length of furloughing, so 3 weeks. So you'd have to have an employee furloughed for 3 weeks before you can make your claim. Your bank account number and sort code, and then just contact details. So it doesn't look like HMRC are actually auditing the claims that are being made. It looks like they're going to pay out based on the employer's calculations, and then subsequently and retrospectively, HMRC just reserve the right to audit those claims, which I'd imagine will be at the top end, and then a random sample somewhere in between. So the employer is responsible for submitting a declaration, calculating the amounts due and making the claim.
Okay. And have you got...
Or a PAYE advisor, such as an accountant.
And have you got any tips for people that are managing their own payroll, how they should capture the furlough information?
So what I've been advising clients within the various systems they use is that a separate pay item should be set up for furloughed employees. What it does is makes it nice and transparent, and that allows you to then base your calculations when you're looking at doing pension contributions and employers' national insurance as well. Also, if there's a pro rata adjustment within a pay period, it will quite nicely and neatly wrap up what is the normal salary for the employee versus what the furloughed amount is. You can also use a deduction method on the payslip to make sure, because obviously the furlough amount is 80% of the employee's salary, capped at 2,500. So there'll be plenty of people that, I mean, that's an annual salary of 30,000. Well, it's an grossed up annual salary of 37,500 to be capped at 2,500. So there'll be many employees below that amount. So what we need to do is consider, well, actually, if you put the 80% amount in the gross salary line, the government will see that as you're claiming 80% of the 80% available. So you put the full salary, 100% of the salary, as a furloughed salary adjustment on the payslip. You then do a deduction before taxes and national insurance are calculated of 20% if you're not topping them up in the deduction section of the payslip, and that means the employee's net payslip is correct while still managing to show 100% of the salary. So my advice would be get in touch, and there's various different payroll systems, but we can advise on how to set that up. Specifically in Xero, we've already done it.
We've had a question in, oh sorry, you go for it.
So there's one other point. We are having quite a few questions from our clients saying that they haven't got the funds to furlough people. So obviously you have to pay it out and then claim it back.
Yeah.
In that regard, you guys obviously can talk more about cash flow, but one of the things that employers can do, they can negotiate with their employees that they have a delayed payment. Again, it's not a kind of well-trodden path. It's something that's quite unique, and it is a negotiation. But again, we can help with that should that need arise. But that's something that people could go to if it's the cash flow process. But again, it has to be done by agreement.
And just to extend that and develop that point further, is actually there's a lot of personal measures that are available to individuals. So if you are looking to do that to protect the cash flow of the business, making your employees aware that they can take mortgage breaks of up to 3 months. It's already been agreed with mortgage lenders, and also using the flexibility that the banks have been asked to give with respect to credit card and other arrangement for lease of vehicles and that kind of thing. Actually being proactive with their employees in extending or getting these payment holidays will allow your employee to have a short-term impact on their cash flow, which may be similar to the short-term cash flow impact you need to generate to be able to agree them delaying receiving their pay.
Yep. And I think this is going to be a common issue for our clients, that the fact that the relief is available, that's great, but there's a timing difference between when they need to pay money out and before they can get the money back from government. So that'll lead on to the next thing we're going to discuss. Before we move there, we've had a question from someone who's asking, if you have served someone furloughed for 1 week in March, do you need to wait until the end of April payroll when the employee will meet the 3-week criteria to make the claim?
So from looking at the government's website, it's the minimum length of furloughing is 3 weeks. So you would need to claim in those 3-week periods rather than the pro rata for March as such.
So you would wait until the April payroll and claim as part of the April payroll?
The claim's separate from the payroll. So you'd run the payroll as normal, and then you would make the claim every 3 weeks with the government.
Okay. So now we're going to move on to the business interruption loan, which is the next sort of level of support that the government's offered. Ryan, do you want to tell us what the business interruption loan is?
So the business interruption loan scheme was something that Rishi Sunak announced about 2 weeks ago, which would be coming to fruition. So it's a scheme available for small businesses, and when I say small businesses, it's small and medium with turnovers of under 45 million. So most of people watching today will qualify for that criteria. It's eligible for the majority of small businesses. It's mainly public bodies or membership associations and trade unions that can't access the scheme. It's available for small businesses to borrow up to an amount of 5 million, and I caveat that with that's subject to the lender's qualifying criteria and their own underwriting procedure. So effectively, there's a panel of 40 lenders. The government advice is that if you can be assessed and have the capability to take on debt by virtue to a commercial loan on commercial terms, then the bank will assess you and they will give you a commercial loan with an interest rate. You won't qualify for the interest-free period. And also the advice on the British Business Bank website is that you should approach your main bank first, and this should be done via an online application on their website or by using any email address and get the business manager to call you back, which can take up to 3-4 days, even a week.
And what sort of, so we've started to see some applications coming through already. What sort of information are the banks asking for to support the loan application?
So we've seen some come through that are asking for a cash flow projection that's detailing what the funds are going to be used for. It's also asking for latest company accounts, confirmation of PAYE and payroll costs and liabilities, because predominantly the scheme was set up because of the job retention scheme claim was going to be delayed. So that's what the government conceptualised as a means to bridge that gap. There are other panels of lenders that are asking for significantly more though. So we're seeing lenders ask for 3 years of accounts, cash flow forecast for up to 18 months. We're seeing directors' assets and liability statements being requested, personal bank statements for 12 months, and also potentially what Lauren mentioned is the need for that to be backed by a personal guarantee. Although it is on the British Business Bank website that the top 4 banks in England are not requesting personal guarantees for loans less than £250,000.
Okay.
But a lot of information potentially.
And for those that do believe they need to borrow some money to get them through, we're getting asked, how much should I borrow? Ryan, what would your answer to that be?
Really difficult to pin down. You've got a lot of these things happening in conjunction. So you've got delayed payments from the job retention scheme. You've also got potentially deferred VAT payments, times pay arrangements for corporation tax, which let's not forget that these are all, forms of debt that you're building up and the liabilities that you're having to pay. And HMRC have said you can put them off, but it's still debt that you're accruing, which may or may not be offset by reduced trading profits and activity. But you just need to be careful in assessing what liabilities are coming up and when they fall due. Now, you should be seeking a loan for the short to medium term. So a lot of clients have asked, what's short to medium term? Well, I would say short is the next 6 months, medium is probably the next 12 months. So actually being able to look at how operationally your business is constricted and what your key payments and key responsibilities are over the next few months is part of the decision process. But also you should factor in, when are my sales going to look like they're going to increase to a normal position, and do I have the ability to service the loan and have it as debt long term? And all of these decisions should be made before the business owner becomes anxious about the fact that they need to borrow, because at that point it's human nature for people to make inappropriate or not the best decisions, because when anxiety peaks, people will accept loans at higher rates or for longer terms, or accept more than they're needing to borrow. And ideally, my advice would be, if you can borrow and you can get access to this scheme and you feel that there's an amount you can repay within 12 months, then this scheme will benefit you greatly, because it will be interest free by the time the payment's made. Anything beyond that should take careful consideration.
And have we got a clear idea when the money will be received? How quickly it'll take banks to pay out?
So they're being heavily criticised at the moment for the lengths in which the person or the applicant or the business applying for the loan is having to go through before they're actually approved in the first place. That's a very difficult question to answer. I think in the first day, 30,000 businesses applied for the business interruption loan scheme. And then within that, what they're doing is they're prioritising where all of the information has been requested and received, and they're not actually actively chasing outstanding information from those that haven't provided the list of documentation the bank's required. So if you're proactive in getting the full amount, the list of information that the bank are requesting or the lender's requesting, then you have a better chance of securing it early. But in terms of when it'll actually come in, your guess is as good as mine.
Okay, thanks for that. So before we sort of wrap up, I'm going to ask, we've got one last question that's come in, and that is sort of going back to something we talked about earlier. What about, is it possible to compensate staff for costs they incur when they work from home? For example, utilities. Rowan, can you help with that one?
There's already a simplified expenses regime that's available and open to directors and staff members, which is £4 per week to cover the costs of utilities, so light, heat, telephone bills, your broadband, for example. Anything outside of that needs to be itemised and detailed, so people can claim more, but they have to go through the process of correctly apportioning what the business use is, and that needs to go through a sign-off or approval procedure. So I actually think that a lot of these costs the employees are incurring already. Most people already have telephone bills, already have their broadband, light and heat. So actually, I think realistically, in terms of the amount of work that has to be put in for the desired results, I think £4 a week per employee is probably the way to go.
And that is for the employer to pay out to the employee, or is it for the employee to, yeah, okay.
And that's not subject to tax because it's a reimbursement of expenses, and that can be added to the employee's pay slips for the number of weeks that you're claiming for.
Yep. Okay, great, thanks for that. So we're going to sort of coming to a conclusion now, and I'd like to sort of put to each of the panel, ask for one final thing that you'd like people to take away from this webinar. What message or action you'd like them to take away? So we'll start with Ryan.
So my takeaway for is that effectively you should be planning, plan, because if you're leaving it to the point in which things need to happen urgently, there's unlikely to be a scheme or a loan or something that you can turn on quick enough to service your need. So take the stress out of it, the anxiety. If you need to project your cash flow, if you need to look at your supply listings, if you need access to any of these schemes, speak to us as early as possible, and we'll see what we can do to support you, but do that as soon as you think you need to, rather than leaving it to the point that's critical. That'd be my takeaway.
Brilliant, thanks Ryan. And Alison, can I put the same question to you?
Just one. I think, yeah, just make sure that you apply the kind of general rules of employment law, which is kind of the reasonable decision making, fairness and transparency. So don't kind of do something with one employee and something different with another. And kind of because you're in a situation and you're panicking, you kind of make quick decisions. You need to kind of take a step back and think, okay, I need to apply these rules fairly and reasonably and transparently across the business, and I need to have justifications for whatever decisions I make, because whilst everyone seems to be fairly accepting of the decisions employers are making now, you know, when the dust settles and people start kind of reflecting and thinking, was I fairly treated, then that's when potentially bumps will come along. So just make sure that any decision you make, you've kind of thought it through and you've got a reasonable and fair justification for rolling out, is probably my takeaway.
Great, thanks Alison. And Lauren, how about you?
Yeah, it follows on from Ryan and Alison, to be honest. It's getting that advice as early as possible, and also making a note of the decisions that you make, because that will put you in good stead from an insolvency practitioner's point of view. If the worst comes to the worst, then you shouldn't be criticised for the actions that you took, because you carefully considered and you had that advice.
Brilliant. Thank you so much, Ryan, Lauren and Alison. That wraps up our webinar. So on the screen, you should be able to see everyone's contact details. So if you want to get in touch, you can do so. If you want to receive a copy of the template for furloughing, send a message and we'll share that with you. And we're putting out lots of content on social media and on our website to keep people up to date. So if you want to keep up to date with that, subscribe to our mailing list and follow us on LinkedIn, Twitter, and you'll see what we're putting out. Or give us a call. We're available to help. So I hope that's been useful. We'll share a recording of this webinar straight afterwards, and have a good day. Thank you.
Thank you.
Thank you.
Bye.
Bye-bye.
Bye.